So you either trade the decisional with a 50-50% chance that we have a breakdown. So now this is the same shit. If we trade back to
look at where
here,
it stopped.
this is a bearish POI, and we did close below. So our first entry would be, oh, okay. I'm demo trading here.
Yeah. Well, you have 2.5 million in your account.
Yeah, something like that. Yeah. Okay, so now go, 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 go. I want to wait till it's here because this is the order flow, so it has to mitigate at least something. Come on. That's the order flow. And now my TP, not my TP, my modify, my stop loss is going up here. Okay. But it's more likely that they go for the 50% I said for the over here.
There is going to be a retrace. They reached the 59. Where is your fib anchored there on the 59?
This one you mean?
Yeah.
That's from the hourly and then the 5 minute. Oh, it's the whole move. Okay, you mean this 59?
No, the one that was on.
Yeah, that was the whole move, because that was based on the 1 hour.
On the body.
Yeah, on the bodies of the 5 minute, because it was based on the 1 hour.
Yeah.
Well, as soon as we take out this one here.
Oh no, I think this is going to be a good trade.
Then we move our stop loss to break even.
I think this is going to work.
I don't know, but it's just a rule. I entered a higher time frame PD, but it's not a very solid PD array. But then again, it was a PD array. I usually don't trade the fair value gaps.
No, you know what? What I've noticed is that they take it like 59. The 59% is a mitigation level for me. So basically, they go. If you look at each swing, like you have the majors, you have a top and a bottom, the top of the range, the bottom of the range, and then each swing between that, they go systematically. The algo will go systematically and hit every 59 level until everything is mitigated of the swings. Then it will go for the external liquidity. So that's what I've noticed lately, and it works. I don't have the exact statistic, but it works a lot of the time.
There we are. Stop loss to break even.
Yeah, no, this is going to work out. And if you pull a fib from the bottom, from the very bottom on the 5 minute to the swing high, then that's where I would look for an exit.
I just want to see this one respected.
Yeah.
Because I don't trust it one bit. But it doesn't matter. If you have a solid entry rule like this on the 1 minute,
yeah,
and like I did here, you can either close the trade for a very small scalp, or take something off so that your risk becomes very low. Because I took off, I don't know, 20 or something. Let's see, where is it?
Yeah, it's
800. No, this. Where is it? Account history. 500 profit, and now I only have 200 risk.
Yeah.
But the potential is way bigger, because potentially we go all the way down, because there is, like we saw, This is
Yeah, there's
equal lows.
old low.
Yeah. Well, it's not only an old low; it's equal lows. So, and this low is higher than this low, so it's even a high probability, a low. No, no, what does ICT call it? A low risk liquidity run. That's what he calls it, I believe.
Low, yeah, like
Mr.
low
E,
resistance.
good evening or good afternoon.
Good evening. Good morning over here.
Morning. Okay. Yeah, we were just going over some theories that I tend to have great belief in. Let's call it like that. And while talking, and somebody mentioned I like NQ. Well, I don't like NQ very much, but it doesn't matter. It works everywhere. And while talking, we were taking this demo trade. So this is what you see now. But there is a recording of the whole conversation we had. We started about an hour ago, I guess. I don't know. Yeah. But actually, I was just going over the theory and the stuff we are planning to teach in the 28-day to 100K challenge. I don't know. Would you be interested in joining the challenge, Mr. E?
I heard you on Kit Space, and it sounded really interesting. I did do the original session with you. I did watch your theories and everything.
Okay.
To be honest, on my end, I'm a little short on cash, and so I'm trying to soak in as much as I can. I didn't realize you were going on live today. Otherwise, I would have not gone to yoga and I would have been here.
Okay. Well, there is a option to join it free. It's just not very interactive with me, but you can join the 28 challenge for free if you bring a buddy. The only thing is you're going to get the recorded version of the first challenge, which was in January. But
Right.
well, we have somebody here. Well, I don't even know, Dennis, if you took the the challenge. But Dennis is a student
Yeah.
from me from before. But we started off in January with I believe 20 people. And I kicked out like 9 or 10 people that weren't serious, and the other 10 were all funded traders after the challenge. So not immediately after the challenge, but I recently heard that Wanderer, which was one of the contestants, also managed to get 2 funded accounts. So well, the shit works if you are willing to work. Let's put it like that. And as I mentioned, there is a free option. So if you want to be part of it, no problem. There is a link in the chat. You don't have to pay anything. The only thing I ask is that you're committed. And if you're not committed, you're going to get kicked off the program. It's that easy. Because it's also my challenge. And my challenge is I want to prove that I can make somebody who is willing to listen and do the work, that I can make him a consistently profitable trader. So you're welcome to join. It's not about the money, at least not the money you have to pay me, because that's not what we're here for.
See, it turned out to be a good trade.
Yeah. Yeah, it's just rules, huh?
Yeah.
You saw me explaining it like 3 or 4 times this afternoon, and now it occurred, and I told you before.
You should clip.
I told you before.
You
here.
should clip this.
Yeah, I have a recording of the whole session. So I've been telling nothing else than if we enter a higher time frame, PD array, then we have to check out the old low, and when we retrace back to the first bearish PY zone on the 1 minute, or at least on the lower time frame. In this case, we based it off the 50 minutes, so we were checking the 1 minute. And then you just enter. And well, you saw my stop loss. I mean, it was over here.
Mm-hmm.
So that was not that big. And so actually what I teach is, let's check, short, we entered here. This was a stop loss. So we should have closed the trade by now, or at least take the majority of. So let's do that, because otherwise I'm not doing what I'm teaching. And we don't go for the home runs, like I told you, we don't need to.
No.
And we are entering a bullish PY zone, so because this is a breaker.
Mm-hmm.
And that's why we need to trade with both screens, so you know on the 15 what is happening, and that you don't get caught up in the 1 minute fantasy. What I am gonna do though is that's called a buy stop. Yeah, a buy stop. I'm a little bit confused by now. Yeah, buy stop. Where is it?
I know.
Trade. A buy stop. For half 10. Okay. And I'm gonna move it like here, because I don't want all my trade to go up. So I at least secure half of what still was there. And I move my stop loss now to absolutely no loss at all. Because then it won't be the first time. There is a possibility that they just, now without any warning sign, just run price up.
Yeah, usually if there's an impulsive move.
And this way, you at least secure your 3R, because you know I'm an advocate of the 3R.
Oh yeah.
3R and get out. I mean, get in, get out. And if you do that day in, day out, 9R in a week is very fine. And we were already at like 5R, so why risk that price just trades all the way back up to a, well, marginal trade, instead of the fact that we had a perfect trade and we did everything by the rules. Because it's not always that they only, I mean, this is all mitigated, except for this zone here. So we have I can almost guarantee the price is going up, but never mind. We have a bullish order block here, or a POI zone, let's not, a buy zone on the M15. We have a bullish breaker, and we have a fair value gap. According to Mr. ICT, this is a guarantee for higher prices. So if you mark off the 50% of the fair value gap now, then this should be a level where price should stop and retrace to the other side. Bullish fair value gap. Now if we take this and put it on the other time frame, then we should monitor this fair value gap, because this is the 15-minute fair value gap. But we just booked our profit, so we don't actually give a rat's ass what price will do now, because we took out 500, 1,000, and 700, which is 2,200, which is fine.
Well, in terms of ticks, that was like 400 ticks.
Okay.
That's what people post on Twitter, you know.
Yeah, well, that's ego trading. We don't do ego trading. We do theory.
Oh no.
And we practice what we preach.
Are there any commodities that it doesn't work on?
I don't know. I mainly focus on.
You're mostly FX, right?
Yeah, I'm mostly FX. But this shit also works on stocks. It works actually everywhere. It's just that even within the forex pairs, on one pair the action sometimes is smoother than on other pairs, and you just have to not get married with. I had a discussion yesterday. Let's put it like that. This doesn't work as nice on the NQ than it does on the forex. And then my question is, okay, then why trade the futures or the Nasdaq or whatever? If it works better on the forex, then why don't you trade forex? I mean, are you married to NQ or?
No, I mostly trade metals, but I've never traded forex. So
okay. Well, this works on metals also. On oil. Don't know if you trade that, but.
Yeah, I trade oil and metal. I haven't traded oil in a few months, but normally oil and metals.
Okay, well, oil
more than
oil works also. I know Kit trades a lot of oil lately, and You know Kit, ICT concepts?
Yeah, yeah,
okay.
yeah. That's how I. That's listening to his space is how I heard about you.
Oh, okay. So, and Kit is at least concerning market structure, he considers me his mentor. So, Kit has a lot of other stuff with the DR but I'm mainly a market structure trader, and everything's 100% rules based. So there's no if or but or I don't know. Yeah, someone can see price different than I meant with my definitions, but that is then solely on that person himself that he's not applying the definitions. If you know what I mean. So actually, everybody who studies my work should come up with the same traits, because a definition is a definition, and my definitions are that clear that you cannot. How do I say this? Dennis, help me out. You cannot interpret them in two ways. Let's call it like that.
Yeah. Yeah.
Only
Yeah, I never really understood DR.
only when you
I
make it
looked into it
complicated
and
and you start. Well, I don't know. It was Jan, I believe. Didn't he say he was busy with an indicator that? Yeah, here it was. He's coding up an indicator to plot out the weekly and the monthly candle wick and tail, and then the 50% of these wicks. Yeah, well, that's nice, but in my definition, or at least I don't have definitions for that. I mentioned that okay, the half of a fair value gap is important and the half of a liquidity void is important, but I don't actually trade it as being a point of interest. I only trade it like okay, maybe price could go there. What I do trade is well, you know, the 59 Fibonacci level and the POI zones.
how'd you come across the 59?
Hmm? Let's see where
What
we are
made
in
you?
the. Well, we still didn't even pass the 50%, I believe. Let's check. This is the 50-minute, and we want. Nope. It's not even the 50. But they don't have to if they're in a hurry.
I think we're still going up. Because regardless, like for me, I would have been done by now.
Yeah.
Oh,
Sure, it's more than 4 hour, 4 or 5 hour. I don't know where I
yeah.
got out. This is the first. This was the second. Okay. But actually, the first was over here when we took out the low. But it was a very relaxed trade. No stress. No stress.
It was a good trade. It was a good trade. So, for my money, I mean, just for shits and giggles. For my money, the next we still have some to the upside at 59 level from the swing from the previous day low. But anyway, that's neither